Welcome back to my YouTube channel. Please subscribe to my channel if you watch this video for the first times. Also, I encourage you to watch my other video. Today I'm going to talk to you about the 4 type of loans that you can use if you decide to buy. If you been thinking about buying a homes, there are 4 type of loan you can use to purchase a homes. You can use any of the 4 types. We have the FHA loans, we have the FHA 203K, we have the conventional loans, we also have the VA loan. The FHA loans, the FHA stand for Federal Housing Administrations. It's a government loans that give low-income family access to buy a home if they have desire to do so. The minimum requirements of the FHA loan, the credit score has to be 580 at least. It can be better. And with the 3.5% down, and you pay for the private insurance mortgage, the PMI, the insurance, the PMI, private insurance mortgage, and the debt to ratio less than 43, and a proof of employment and a steady income. Once you have those, once you have a proof of employment, you have a steady income, your debt to ratio is less than 43, you pay for the private insurance mortgage, which is, if you don't know anything about that, you don't need to worry about it. Your real estate agent, your loan officer is going to explain it to you. You qualify to purchase a homes. So the FHA is a government loan which is offered by FHA approved lender. So to be able to offer this loan to the publics, you have to be the bank has to approve by the bank has to approve to become one of the lender. So once the bank is approved and you have those qualifications, those little qualifications, you can be qualified to purchase your next home. So the FHA is a government loan that give you access. If you're not making a lot of money, you have the desire to stop rental, you have the desire to purchase your homes, you can use the FHA loan to do so. Inside the FHA loan, we have the loan, they call it the 203K, or the REHAB loan, or the construction loan. So the FHA 203K give you access to buy homes, also to use some of the money to do some renovations, some of the repair if the home need repair. Once you qualify for the 203K, it's one of the loan that give you access. If you buy a house for the first times, the bank can actually give you money to fix the repair. So is the same as the FHA, which is also a government loans. So we give you an option. If you get the loan, you can use it to buy the house, also to do the repair of the work. So you also, once you get the same thing you had to have for the qualification for the FHA, which is you have a job, you have a steady income, you have the minimum of the credit score, you can actually use this type of loan to purchase your home. So the next type of loan that we have the conventional loans. The conventional loans, compared to the FHA, if you're using the FHA by itself, the house has to be able to qualify for the FHA. If the house needs some work, it's not qualified for the FHA itself. That's when the 203K come. You can use the 203K, so the bank can give you money to fix their problems. And the other end, we have the conventional loans. The conventional loans is not offered by the government. It's secured by private lender. It's to the private lender. That's why the requirement is different compared to the FHA. So you can put up to 20% downs. You can put up to the 20% downs. So it's a private loan. It's also sponsored by some of the government enterprise, which is the Fannie Mae or the Freddie Mac. So it have a traditional requirement of the up to 20% down. Once you give the 20% downs, you don't pay for the PMI, which is the private insurance mortgage. You don't pay for it. But since now most people not qualified, most people doesn't have the 20% downs, it also give you access to put the 3% downs, but the debt to ratio has to be less than 30. So that's a big difference compared to the FHA. The debt to ratio has to be less than 43, and this one is less than 28. So the FHA also give you access, if you, like I said, if you don't have all the 20% down of the price of the loan, which is most people doesn't. If you buy a house for like $300,000, you need 20% down, which is, that's a lot of money. Most people working paycheck to paycheck. Most people doesn't have a lot of saving, so they don't have it. So that's when the conventional people loan said, you know what, we can compete with the FHA 203. We can compete with the FHA with the 3.5% downs. We can keep the same requirement, but just give the people the access to put, if they don't have the 3.5, if they don't have the 20% down, they can actually put the 3% down for the minimum requirements. So just to remind you about the conventional loan is a private loan. It's not secured by the government. It's a private loans. It's sponsored by one or two of the governments, which is the Fannie Mae and the Freddie Mac, but it's not a government loan. It's a private loan. That's why, so the requirement is a little bit different. It requires you to put 20% downs. Now they see that most people doesn't have the 20% down, so they give you the access to put 3.5% down, so to compete with the FHA. So this loan, most of the house, if they need work, you can actually use it, so they don't really ask for a lot of requirement compared to the FHA. So if the house needs a little work, you can get any handyman after you purchase the home. After you get the loan, you can get any handyman to help you fix the work. You don't really need to get a licensed contractor to help you with the service. So it doesn't really require that. If the house need work, as long as you can stay in there. For example, let's say you might have the house, the bathroom need to fix, but you don't have one bathroom, so you still can sleep in the house, but you just need to get somebody to fix that. That's why this loan, some people use it, because some of the house doesn't pass the FHA, but they qualify for the conventional loan. And this loan, compared to the FHA take longer than this one to close, because the FHA is the government, has the government, everything that has to be approved by the government, it take longer. So if you don't really have patience, if you qualify for the FHA, you can still use the conventional loans, because this loan is private. Once you work in private, you take more time and you have people that really focus, so you can get qualified, you can get close into your house faster than the FHA. And lastly but not least, the other type of loan that we have the veterans loan. The veterans loan is only for the people that serve in the military. This loan, they created in 1944, because back then people didn't have 20% down. Most of the veterans, when they come back, they need a place to stay. They wasn't working, so they give them access. They can actually go ahead and purchase a homes with no money down and with little credit score. So the VA loan is only for people that was in the military. That's what it's only for people that's been in the military, because you have to actually prove that you were in the military. Most of the VA lender require that the credit score has to be 620. The credit score has to be 620, and you also have to have a job so you can show them that you can actually pay the loan back. Even though you were in the military, if you just come, you don't have a job, they're not gonna give you the loan. So you actually have to go get a job, look for a job. Once you work for 2 years, you can actually come back and you can actually use this loan. Get the certificate from them. You can get it online on their website. You can actually use this loan to buy your house. I have a few clients that use it, so which is you don't make any money down. You don't put anything down. So, and one of the benefits of the VA loan, even you put no money down, you don't pay private insurance mortgage. So they take that out for you. That's one of the plus, because the insurance you pay with the FHA and the conventional loan. For the VA loan, even though you don't put money down, that's one of the benefits, because they want to reward you as being a member of the military. So they take the BMI out. Another benefits that they have the low interest. And then if you decide to pay your loan faster, so they don't charge you for any early penalties. So that's one of the benefits that's required. That's one of the benefits if you decide to use the VA loan to buy homes. Some people that selling a house, some people doesn't take it because it take longer than the FHA or the conventional loans. But even though you find somebody that you give them, they doesn't take it, you're gonna find somebody else that respect people that's been in the military, that want to respect you for your services, that's willing to take it. So everything you're doing in life, you has to have patience. So we have the VA loan. So after that, so as you know, some people always ask between the FHA, the conventional, which one is better. In general, the FHA allows you to, with a low credit score and with a low minimum down payment, you can purchase a homes. You don't need to have 20% down. With a low 3.5 and a low credit score 580, you can buy a home. In the other hand, the conventional loan require up to 20% downs, and the ratio has to be less than 30. So at the end, and the veterans loan, you have to be under military services to use it. So at the end, some people usually ask which one is better, which one is not better. So at the end, the benefits of choosing any one of them to purchase your homes, it really come down to you personally. So John might be qualified to use the FHA, Peter qualified to use the VA loan, and Mary qualified to use a conventional loan. Each of you are different. Your personal stuff is different. So therefore, I cannot really tell you which one is better. All of them do the same thing. All of them you take a loan. All of them you pay the interest on them. All of them you have to pay on time. So at the end of the day, so you have to go see a loan officer or go directly to your bank. So you explain them your situations, and them they're gonna look at all your files, your bank statements, all your work stuff. So they're gonna tell you exactly which one is better for you to use. But all of them is good. As long as you use one of them, you don't have money to buy the house, you can use one of them to purchase your home. It's better. So thank you for taking your time to watch my video. Please subscribe to my channel if you're not already done so. If you want to buy your house, if you've been thinking about buying your house, I will be happy to help you. So contact me, leave me a comment. I will see you in the next video. God bless.